Hi guys, this is Avilagoat speaking. Welcome to yet another video. On today's video guys, we're going to be actually analyzing the market, but I want to actually help you and give you tips on how to actually understand and identify high probability trades. This came to my attention that a lot of people are struggling with how to identify high probability trades, because you'd find that most of the people are trading trades that are not yet matured enough to can actually go to the direction, because most of the people, they enter trades earlier and the trades kick them out before the actual direction. So I actually want to share some few tips on what to see and what to expect before you can take trades. So this is one of the aspects that I saw that it's very much important for me to actually share these types of tips, because most of the people are asking the very same questions over and over again. But how about I do a video on how to actually identify high probability trades? So on today's video, the first pair that I want to actually highlight today with you guys, it's the DXY. So with the DXY, we all know that the DXY is one of those currency index which drives the market. Me saying that is because the DXY, I came to realize that it actually drives the market in a way that whatever that is actually DXY correlated actually moves with the DXY. And as you all know that the USD is one of the driving USD currency index in the whole market. So meaning that the market depends on what the dollar reacts. So now, as you can see right here, we have the DXY. So we need to actually see what happens when the DXY go down or go up. So we need to actually see what happened previously and what to expect in the next current move. So as you can see right here, we have the double top and we have the double bottom, right? So these are the two major objectives that you must look at, because the market, before it takes the long-term move, it must give us at least a pattern from a higher time frame structure. So as you can see right now, the market couldn't reach this peak right there, which is the double top right there. So it was gonna make it 1 2 3. So basically that was gonna be one of the highest move that the DXY had made. But now the question is, will the DXY reach there? So let's find out. So as you can see right here guys, we have the double top right there and we have the double bottom right there. So we need to actually see the significant role that the market actually played out last week. So as you can see right here, this one of the aspect that you must check, this impulse move right here and this type of correction right there. So this was one of the moves that the DXY had presented to us. That's why you can see the impulse move towards to the upside. But what we need to see, what really happens in this type of movement, right? So we have an expanding wedge type formation, as you can see from here. We have 1 2 3, and also we have this at the bottom. We need to see and check what really happens in a higher time frame structure. So what happens in a higher time frame structure is that the market gives us an impulse and this big expanding momentum, right? So upon our third touch, that's where the market gave us a signal of what is happening, right? But we need to actually identify and see what is it that is happening, because right now the market retested below and rejected upon our third touch right there. So upon our daily time frame, we can simply see that structure, it reacts according to how it presents itself to you. So you need to open your eyes when you check such type of moves right here before we can actually decide what the real move is about to do, right? So right now we can simply see that the DXY seems to be losing momentum because it has given us a third touch right there, but we need to open our eyes because there is a level of support right there, and you need to open your eyes in a way that you must look into a way of seeing the market in a broader way. So right now, if you can simply check right here, you have another low right there, and these two lows are the ones that we're going to use to see what is the next move of the DXY. So now the question is, what do we see? So we can simply see that we have one touch, second touch right there, and let's clone out our trend line. From our cloning of this trend line, we can simply see that the market gives us first and second touch right there, but when we expand our trend line, you can simply see that this is the language of the market. What you need to do is to see it beyond the eyes, right? So right now, when you see it beyond the eyes, you can simply see that the market speaks to you in a different way, right? The market speaks to you in a different way. Yes, we can see the bullish trend right there, but the most significant rule to see, it's how the market approached our third touch right there, right? So you can simply see that our third touch was broken out in a way that from here we had an impulse correction, impulse move until there, right? So our third touch was actually hit with an impulse, right? So upon our impulse, we had some sort of like a channel that was going out of our channel, right? It's a channel inside a channel, right? So this gives us an indication that the market went to the outside with a channel. But now the most important thing that you must understand right here is how it broke out of this structure, right? It broke out of this structure with an impulse correction, impulse move, right? So right there, upon what we saw right there, we saw that structure identification, we saw some sort of like an exhaustion of the market, right? So an exhaustion of the market, it's when price actually signals us with a reversal pattern, right? This is more like a reversal pattern at the resistance or the third touch, right? So if you can clearly look into this, you can simply see that you had a double top right there, which is one of the reversal patterns in the market that we use most often. So you can simply see right now that the market signals to us that it has already broken the structure and gave us a beautiful retest and continuation flag, some sort of like. So basically guys, the momentum of the DXY wants to actually give us the selling opportunities, right? So you need to open your eyes when you check such type of movements. So now what I need to tell you guys is that most of the times price gives us this type of channels, right? Price gives us most of these channels because why? The market wants to get people caught into the wrong side of it because it has been going to the upside for so long, but the market chose to give us some sort of like a double top. But the language is that what do we really see the most? We see that price gave us 1, 2, and our third touch was not in place, and it was giving people in the wrong side of the market. Basically, if you can expand this type of trend line, you could simply see that if we can erase this, you can simply see that the market, when it was here, most of the people were caught into the wrong side of it because we literally saw that this is a retest and we need continuation, right? But you need to open your eyes in a way that you can simply see that, okay, this is more of a reversal pattern, because now the market gives us higher highs and higher lows towards the third touch, right? So this will give us a signal that the market is about to reverse. So you need to always actually give out an opportunity to see and learn how to identify these types of structure identification. So this simply means that we can actually enter below this trend line, which is the reversal pattern, and we have the DXY looking so beautiful to actually go with the cells. But right now there's also a possibility that the market could actually come back here and give us an M, which is the bigger M, before we can signal to go down, right? We can simply see that the market can actually has this possibility of going to the upside to give us a triple top before it actually shoots to the downside, right? There is that possibilities. The market has its own way to react. So now moving forward to another pair, I want to actually show you and share with you what does the USD CAD actually has in store for us this week. So basically on the USD CAD we have most of the things that are happening on the DXY, and what happens on the DXY affects the USD CAD, because the USD CAD is one of the aspects that we must look at, because the USD is the code of the CAD, right? So we can simply see that the higher time frame structure identifies a double top, right? So with the double top in place of this beautiful USD CAD, we have also everything that we need to know inside this double top right there, because the market went to the downside. However, this has been a momentum of the market giving us some sort of like a correction, but eventually chose the direction to shoot to the upside. So the question is, will the market sustain this momentum of the buys? Let's find out. So we can simply see that from here we have double top right there. And what do we really need to know? We need to know what is the next move of the USD CAD. So with the double top in place, we have another low, which is right there, and where the current market price is right now, we can simply see that even if we can extend and have this type of momentum right there, you can simply see that the market right here gave us some sort of like a head and shoulders pattern, right? So our head and shoulders pattern, even if we can extend this one, so our head and shoulders pattern is what we really need to have, because the market seems to respect these types of movement, because we have a shoulder and a head and the potential right shoulder. So what do we really need to see? We need to see what's gonna happen with this impulsive move, but let's find out on a smaller scale structure. So the smaller scale structure, now it's one of those things that we need to understand, that from here you need to see what's gonna happen. The question is, will the market continue to shoot up, or the market will still sustain the sells, right? Let's find out. Right now, if you can check right there, there's nothing more that you can identify on the daily. Let's move to the 4-hourly chart. So now the structure of the 4-hourly chart will give us a clear signal of what we need to expect. So right now, if you can clearly open your eyes, we have the low right here and impulse correction to the upside, right? But let's break down what we see right here. So you can simply see that from the low right here, this low right here, the market gives us some sort of like a 1, 2, 3 pattern, right? So from the 1-hour structure, this pattern needs to be sustained, because we don't really know what's happening right here, right? So right now, if you can actually do something like this, you'll simply see that we have an expanding type of formation right there, right? We have a 1 2 3. The market gives us this type of cells. You can simply see that from this type of momentum right here, we have first, second, and third touch in place, right? Because the market closed with a buy, and Monday the market gives us this strong cells, right? Right now, if you can actually look into what is happening right now, this is an expanding wedge, right? The question is, does this expanding wedge going to actually sustain where it is right now? So most of the cases we have this impulse move and this expanding wedge, and most of the time this expanding wedge normally acts as a continuation of the movement, and also it acts as a reversal. There are two options that we need to look at. Is this going to sustain a continuation, or will it sustain a reversal? But what we need to understand is that we are in a critical zone, which is this one right here. Remember, on a higher time frame structure, price is sitting with a shoulder, head, and a right shoulder right there. So what we have right here is the right shoulder from a higher time frame structure, right? So we need to open our eyes, because this higher time frame structure, it's the right armpit of the left shoulder of head and shoulders pattern. You understand? It's the left and a right shoulder. So this is the right armpit of the head and shoulders pattern. So what we need to know is that if we have such type of movements, price is unlikely to push to the upside, because what we have right here, the market can't just retest and go to the upside, right? It's unlikely for it to react like that, because where we are, the structure needs to be there. And what we need to expect from here, since we have first, second, and third touch right here, the market at least need to get people caught into the wrong side of it before the market gives us the right momentum to the downside. So right now, what do we need to know? We need to see that price is actually giving us some sort of like a signal, because here it's one of the major aspects that we need to actually look into. Because right now, what do we see? We see a 1 2 3 expanding wedge, but this expanding wedge is going to actually give us some sort of like an impulse move. Once it gives us a retest below the structure right here, that's when we can expect higher time frame structure to come in place and the momentum to push further down, because that's where we can actually enter our continuation movement. Because right now where we are, it's getting people wrong side of the market. So we need to actually have that momentum to see price going down. But before we go down, we need to have a higher confirmation of price with this type of impulse correction below, and this will actually act up as a head and shoulders of the smaller time frame structure, which is going to be our head, our left shoulder, our head, and our right shoulder be right there. Then that's where we can give us the cells. So moving right along, we can actually look into having to see another pair, what normally it reacts to. So let's move to another pair. Right now we have CAD JPY. So basically guys, on CAD JPY we can simply see that the market reacts in a different way, but I would like to actually show you what really needs to be done when we see such type of movements. So CAD JPY is one of those pairs that are looking so good, and the market actually respects a price action when it comes to CAD JPY. So as you can see right here, we have CAD JPY and we have the double bottom in place, right? So this double bottom holded CAD JPY for so long and it went to the upside with it, right? So the market right here gave us a double bottom that held for so long until price went there. And right there on the left hand side we have some sort of like a high, which price actually gave us an impulse and went to the outside and came back inside, right? This is one of the crucial things that you must understand when we actually analyze and see the market. So for you to identify high probability trades, you need to see the market from a higher perspective before you can actually go on smaller time frames, because smaller time frames, they help us to actually enter the market, but the direction, it comes from a daily, weekly and 4-hour time frame, which is the higher time frame structure. So from moving right along, you can have that we can simply see that the double bottom hold it for a long time, and right there we have a double top, right? So on our daily time frame, we can simply see that structure happened to actually respect setup based on what we can actually identify right there. So what we can really see on this structure identification, we can simply see that we have this beautiful low and we also have this beautiful high right there, right? And this high went to the outside, but I want to show you something interesting about this pair, right? So if you can carefully look into the structure of CAD JPY, it gave us some sort of like a double top right there, but it went to the outside with an impulse and came back with an impulse into the inside of it, right? The question is, what is really happening right here? So let us find out. On a 4-hour chart, we can simply see that the CAD JPY pair actually gave us some sort of like a expanding wedge, right? Expanding wedge. Price gave us a breakout and a break back in and an impulse correction, pushing price to the upside, right? That is what we expected on this kind of pair. So right now, if you can check right now, you can simply see that we have a shoulder and a shoulder again, which is the double top, and the market went to the outside with some sort of like an expanding wedge type of formation, right? So right now, if you open your eyes, this actually happens to be a high probability trade if it happens either at the top or at the bottom, which is resistance or support. So right now this occurs at a resistance. So if it occurs on a resistance level, this simply means that the market respects higher time frame structure, and what happens on a higher time frame structure actually becomes a highest probability trade. So right now, if you can actually look into what is happening right here, we have this expanding 1 2 3 touch, price went out and break back in, and we have this type of momentum whereby the market gave us a 1 2, which is the double bottom, double top, and from there price broke out and gave us an M formation before it could actually reverse, because they knew that a lot of people right here, they are caught into the wrong side of it, because first and foremost, before the market could actually come with a sell, you can simply see that the market was giving people getting into the wrong side of the market with this type of momentum where they thought that price would actually continue with the buys. However, they were wrong, because what signaled us is that price normally respects higher time frame resistance. So it got people caught in the wrong side of the market and gave us some sort of like a touch on the top side, which is our first, second, third touch right there, and the market gave us an impulse to the downside, right? So this was one of the most highest probability trade ever, because you can simply see that after the breakout and a break back in, we eventually got caught in a wrong side, in a good side of the market, and price gave us some sort of like a uprising channel. The very same thing that occurred onto the DXY. Let's quickly check the DXY. So do you see that the DXY hasn't played out the way we want? But this type of momentum and this type of channels, they do play a big role in the market, right? They give us this beautiful push to the upside with a channel, and they give us another channel which goes into the outside of this one, right? The very same thing happened on CAD JPY, right? And CAD JPY played out very well because the market gave us what we really wanted, because right here it gave us this channel right there, and this channel gave us some sort of like a nice momentum to the upside. So even if you can do something like this, you can simply see that we have a first, second, and price went out, give us a break back in, and we actually got this impulse move to the downside, right? And this impulse move to the downside gave us some sort of like a breakout, retest, and continuation. So now the question is, what does this continuation mean? That's a very good question, right? Because right now, if you can see, most of the time, the first correction after an impulse, the first correction after the first impulse, that is the most highest probability trade to take, because the market respects first corrections after an impulse, right? Let's check on the upside movement. First correction after an impulse, right? So if you got in right here, and holded your trade, let's say the target could be here. Do you see that there is no drawdown on this type of movement? Price literally went straight to the target, right? This also is one of the highest probability trade, because why? The market gave us an impulse, bigger correction, and went to the upside. Same applies when it sells. Impulse move from the upside to the downside, and the first correction right here is one of the highest time frame structure when you look into it, because right now if you check carefully, what do we have? We have a breakout of the overall impulse correction, right? We have an impulse correction and breakout of the overall this impulse correction. So right now we are at the retest of the overall momentum of this correction, so which simply means that you can simply enter below here and give your stop at least 39 pips or 30 pips right there. Hold your trade towards to the downside, right? Because this would act normally as a correction of the movement. That's when we can expect our sell setup to be the highest probability. So such type of movements, when we look into impulse correction, these are the highest probability trades to look into when you actually trade the forex market, because this impulse correction is one of the highest probability trades to look into. And also when you check here onto the current market price, we are expecting some sort of like an impulse movement towards to the downside, right? So let's actually wait for the movement to happen, and let's see if our price is actually looking beautiful towards to the downside. So by the look of things, the market will react the way we are looking at it, because there is plenty of movement and a room to actually see how CAD JPY can actually structure itself towards to the downside. So there's plenty of movement towards from here, right? So we can simply see that the market would actually react the very same way it did on the left hand side. So we can simply expect the very same movement of price to react the same way until this level right there. So this is a long-term trade for us to hold towards to the downside. So this is one of the aspects that you must look at when you have a correctional phase presented to you on a higher time frame structure or smaller time frame structure. So this has been actually correcting for so long, but from here we are actually going to be selling this actually beautiful pair towards to the downside, right? So moving right along, we have Euro odd, which is one of the most highest probability trades ever if you look into it from a higher time frame structure. So the question is, what do we really see when we check the markets from the higher time frame structure? You can simply see that Euro odd has gave us some sort of like an impulse move and it came back in, right? This was one of the signals that price could actually trickle towards to the downside, right? And this is one of the major aspects to look at. So you need to open your eyes when you check such type of pairs. What do we really need to expect when we see such type of movements? So for us to see that we are in a right track, you can simply see that we have the low right here and we have another low right there. So right now, what do we really see? When we open our eyes, you can simply see that from this structure right here, we have a shoulder and a head and a right shoulder. So upon our right shoulder right there, even if we can zoom the structure like this, you can simply see that we had a double top before the market could actually sell off, right? So this simply means that a higher time frame structure confirms the right movement at the right time, although it might take for a long time, but it will eventually play out the way we anticipate it to do, because the movement is actually taking too long when you look into it on a higher time frame structure, but the direction you will actually get it right. So let's dive in deeper and check. What do we see? Since we have a shoulder right there, and this is a significant level where you can actually mark it and say this is my resistance level, because why? The market was from here with a double top and it went straight down with an impulse. So the rule says, since we have an impulse, what do we need to have again? Let's find out and see. So upon right here with our double top from a weekly structure, we have this type of a low, which is actually one of the most aspects when we check right here. We have what? A double top. And when we simply check right here what's really happening, we shall find out on a smaller scale structure, right? So our smaller scale structure, you can simply see that the market gives us some sort of like a 1, 2, 3 touch upon our trend line. And what do we really see from this structure? We see that the market gives us first and second touch on a lower low. So right now, what do we see? We see structure opening itself towards us, and we can simply see that the market gives us impulse, correction, and what do we need to expect? Obviously some sort of like an impulse move towards to the downside, right? Because we have 1, 2, 3 touches upon the trend line makes the setup to be valid, right? That is one of the most aspects that you must understand. So 3 touches makes the most setups to be high probability. So upon our first, second, third touch, we need to have some sort of like a pattern, because if you can simply see right here from a daily time frame, we had a double top right there, and we need to have some similar things from a current market price. Don't be afraid to see an impulse leg towards to the upside without knowing what's really happening. You need to actually wait to see higher time frame structure confirming itself with a smaller time frame structure. In that way, you will understand that the market plays a big role with patterns, and patterns, they go along with time frames. The higher time frame and the higher the pattern confirms itself with a higher structure, you will simply confirm a highest probability. Let me repeat. A higher time frame structure, when it confirms itself with a pattern at a bigger structure, it will confirm a highest probability setup. This simply means that the market must confirm first with a pattern in a higher time frame structure before we can actually take the direction either sells or buys. That is the basic rule that you must understand. So euro odd will actually give us some sort of like a third touch right there. So if you dive in deeper onto our 4-hourly chart, you can simply see that you have a first, second, and our third touch hasn't been touched as yet, but we really need to see that type of movement that we need to know, which is the breakout and the breakback in, right? The breakout and a breakback in, and we get our entry level onto this beautiful low, which is going to be a correctional phase before we can actually decide to take upon the sells. And at least your stop must be super tight to a point whereby you don't lose a lot, but because if the market presents itself upon this trend line right there, you'll know that the market presents a higher time frame and highest probability setup ever, because if it presents itself below the trend line and the horizontal line there, this simply means that it has confirmed to us we are selling. So those are the types of movement that you must actually, as a trader, know about, and you must actually most often identify them and practice them most often, and check and simply see that if they play out, what do I need to do, right? So without any waste of time, guys, please do make sure that you practice the most and see this type of patterns in a higher time frame structure. So we have come to the end of our video, guys. Please do make sure that you subscribe to my channel, you like and comment below on the comment box, and if you actually need to trade with the broker that I trade with, you can simply click the link on the description and you shall sign up there and actually have a smooth trading platform that I'm using to trade my small accounts and big accounts. So from here, please do make sure that you like and subscribe to my channel. I do thank you guys. This is Avidagood speaking, and I'm signing out, guys. Shalom.